From Capitol Hill to Wall Street to Main Street, many folks pointing a finger and looking for blame in the economic turmoil. Banks have bared the brunt of the blame, but according to Florida Bankers Association President Alex Sanchez, that's quite unfair. He joins us from Orlando to explain, and also with us is Rady, CEO and Portfolio Manager with Rady Asset Management. Let's start out with you, Alex. Tell us why a lot of folks are getting it wrong right now.
Rebecca, great to be on the show from beautiful Florida. Rebecca, look, FDIC banks cannot be compared to those Wall Street investment firms. And many times people use the word bank for everyone. And if they're not FDIC, they're not banks. And quite frankly, I am just tired of hearing on all these shows people getting them confused. Our FDIC insured banks here on Main Street are serving their communities, providing credit. And for those who are saying that banks are not lending, it's like accusing a restaurant owner not wanting to serve the public food. That's how banks make money, is by lending. That's how a restaurant owner makes his money, by serving food. Banks, of course, are lending. But we got used to all those non-bank lenders who are out there, who, by the way, are out of business now. They were providing liquidity, easy credit, no confirmation of salary, et cetera, et cetera.
And you're talking about sort of that shadow banking system, the hedge fund community, the CLO community. Lots and lots of liquidity was out there beyond the banking community, and a lot of that's what's dried up at this point. Let's go over to you, Harry. What's your take on all of this? You
know, my perspective is that money isn't flowing to small business, and small business is really the driver of this economy. So, you know, and we could argue about whether, you know, banks are lending the appropriate amount of money to the right people. But the reality is we really need to create an environment where we don't need to have this argument. And in my humble opinion, the government ought to backstop a 4% mortgage program available to every single homeowner in this country. What that would do is it would refinance all these toxic mortgages off the balance sheets of the banks and put $2,000 to $4,000 a year in every consumer who owns a house in this country.
Then how does that sit with you, Alex?
Rebecca, let me jump in here and say, you know, the government should look at the mark-to-market accounting rules. I think you know, we've looked at that in other past recessions. We need to look at it now. But again, you know, banks are lending. We got used to not qualifying, and because of all these non-bank lenders. We have so much oversight and so much regulation that I can tell you that anyone listening to this program today can sleep like a baby tonight, Rebecca, knowing that their money's safe in an FDIC-insured bank account.
But you're still
that's
saying temporarily suspend mark-to-market accounting.
I think so. I think we need to look at that. I think the government needs to look at those type of things. The FASB rules, 114. I think those are very important. And again, you know,
Harry, that's not necessarily, Harry, though, going to create any kind of generate any kind of liquidity for small businesses.
No, I mean, this economy is in a free fall. Why would banks want to lend to small businesses? I mean, there's to earn a single-digit return. And taking enormous risk. We need to put a floor under this economy, and it started with housing, and it's got to end with housing.
But Rebecca, let's get back to your original question, though. Let's not confuse the FDIC-insured banking world with those investment firms on Wall Street.
And you've made that one very, very clear, Alex. You are FDIC-insured, and there are two different universes out there, the one that is and the one that is not. Thank you so much, Alex Sanchez, for being with us, and Harry Rady as well.
Thank you, Rebecca.
Have a great day. All right.